This is AMU's Trading Bootcamp. If you've been wanting to become a profitable trader, then this is the best place to learn how. And by the end of today's lesson, you'll have a better understanding of volume and breakouts. So let's get straight to it.
Alright guys, so now I'll be talking about volume and breakouts. Again, another very important foundation to when we're talking about trading, because volume represents demand and breakouts are what you want to see in support or resistance for a stock to continue with momentum. Okay, so let's go ahead and get started with volume. So volume is the number of shares or option contracts traded at any specific given time. It can be measured in any time frame, okay? So you can have a specific amount of volume in a 5-minute time frame, or you could have a specific amount of volume in a 1-hour time frame. It's just the amount of shares that were bought or sold within that specific time frame. That's the whole number of volume, okay? So the higher the volume, the more people trading. Volume represents a demand. If there's really high volume, a lot of people are aggressively buying or aggressively selling, okay? If there's not a lot of volume, then it's not a big rush to get into a specific trade. High volume equals high demand on the stock or option, okay? So you want to see high volume not only on the stock itself, but also on the option contracts. It represents strength behind a move, whether it's to the downside or upside, okay? So you want high volume whether the stock is going up or the stock is going down. If there's no volume, there's no trade, okay? So volume is a very, very key aspect that we are looking for when we're going to enter a trade. We want to see high volume because, again, it represents that strength in a move. It represents, is the stock going to really make this big move, or is it not, maybe just take a little small move, okay? So volume, very important. If there is no volume, you take no trade. So I just have some examples up here on the right where you can see just what volume represents. So buy 10 shares of Apple, you sell those 10 shares, your total volume is 20, okay? Same thing with options. If you buy 5 contracts of the Apple 12/31/160 call, you sell those 5 contracts, your total volume is 10, okay? So you just add what you bought and you add what you sold, that's your total volume. That's how volume is calculated. Now, these are the 4 laws of volume down at the right, okay? So stock price increasing plus increasing volume, that represents a strong uptrend. If the stock price is increasing, but the volume is decreasing, that's a weak uptrend, okay? Because like I said, no matter which way the stock is going, you want to see high volume because that is going to back the move, okay? So the stock price is decreasing, and the volume is rising, that's a strong downtrend. High volume is backing the downside, okay? That's supporting the downside. Stock price is decreasing and volume is decreasing, that is a weak downtrend because there's not a lot of aggressive selling, okay? So you want to see high volume where the stock is going up or the stock is going down. To find the specific volume for any given stock, simply hover over the candle and check the number in the top left corner, okay? So this is on TradingView. I just hovered my mouse over that first 5-minute candle, okay, and you can see up at the top left, there were 377,782 shares traded on Tesla within the first 5-minute candle of the day, okay? So 377,782 bought and sold. It's not just one side. Volume is represented numerically, but you can get a good sense of relative volume simply by using the indicator at the bottom of the TradingView chart. So you can see here at the bottom, this is your volume bars, okay? So this is just a way that you can see relative volume. So the volume in this first candle compared to the candles afterward is way higher because it's the opening bell, and you're going to see a lot more volume at the open than any other time of the day. Relative volume is key. So let's take a look at some examples. Okay, so this is a relative volume example. Day 1 volume, you can see how sideways and flat the stock was moving. This is Tesla. This is a 5-minute chart, okay? So each one of these candles represents 5 minutes. Day 1 volume from 9:30 to 9:35. So the first 5 minutes of the day was 377,782. Okay, so that was the total amount of shares that were bought and sold within 5 minutes of the open on Tesla. Day 2 volume, right? So this is just the next day. There was a lot of volume. You can see just the difference in the chart. So Tesla wasn't moving sideways. It wasn't moving flat. It had this beautiful run up in the morning. So day 2 volume, same time frame, 9:30 to 9:35, 5 minutes of time, was 1.134 million. Okay, so day 2 volume equals 3 times day 1 volume. It had 3 times the amount of volume, and that is what caused this huge uptrend, this huge spike in the morning, right? So that's something we're looking for when we want to enter a trade. We want to see very high volume and very high relative volume. So we're comparing the current volume to average volume. So here's another example of just looking at relative volume. So you can see I have 8 different stocks on my chart here. I have 8 different stocks. If you can just look at this, you can tell which one of these has the highest volume, the clearest uptrend, and the most aggressive buying or selling. So just looking at these 8 different charts, I can tell you very clearly Roku, right? If you look at Apple, sideways, flat the entire day, no volume down here. Square, flat, sideways, no volume, all right? All these other stocks, except for Roku, were flat, sideways, and had low volume. So one thing that we're looking at when it comes to volume, relative volume, we're looking at all of the different stocks we have on our watch list, and we want to make sure that one of them is singling out with a lot of aggressive buying or a lot of aggressive selling. So Roku, in this example, if we're comparing it to the 8 other charts or 7 other charts here, Roku had the nice uptrend and an increase in volume all morning. There you go. So now here's some examples of those 4 laws that I talked about, right? So we have, again, rising stock price plus rising volume, strong uptrend. So as the stock broke out, this is Tesla again, broke out of those pre-market highs, made a nice run. The stock price was rising and the volume was also rising on the breakout, okay? And it is going to pull back. Volume cannot just go up exponentially. However, you want to see as it's breaking out or as it's starting the uptrend, you want to see rising volume with the rising stock price, and there you go, that represents a strong uptrend. Rising stock price plus falling or flat volume. So with Amazon here, the stock price was rising all morning, right? It went from $3,500 to $3,545. It's a $45 move, and the volume dropped off the entire time. So of course, the stock totally reversed because there wasn't anyone supporting that move. There was not any aggressive buying. There were not any buyers that wanted to see Amazon continuing to go up. So it completely reversed and went all the way back down to where it started. Okay, so that's a weak uptrend. Stock could reverse. Now we have Tesla. Okay, so we have falling stock price plus rising volume. So again, whether the stock is going up or the stock is going down, you want to see rising volume because rising volume represents demand, okay? That's going to show you there's a lot of aggressive selling or there's a lot of aggressive buying. So in this example, there's a lot of aggressive selling, right? Because our rising volume as it broke out of that 740 support, all right? So we have our stock going down, we have our volume going up. That represents a strong downtrend, and the stock should continue on that downtrend. Falling stock price plus falling volume. Okay, so again, even though the stock price is falling, you want to see the volume rising. So in this example, the stock price of Tesla was falling all morning, okay, but the volume was also falling. So that's a weak downtrend, and the stock could reverse, okay? So if you see a stock dropping, but the volume is also dropping, the stock could potentially reverse. Maybe you don't want to short it. And this chart represents volume as a whole and why it is important to have strong volume, whether it is the upside or downside. So we have Apple here, right? Strong morning uptrend. However, there was no volume backed by it. So the stock actually wound up reversing, okay? Reversed totally. And then it started a downtrend. However, that downtrend had lower volume, okay? So the volume was going lower as the stock was going lower, and it reversed again, okay? So that's where those volume principles come into play. It's something you should be watching throughout the day, every day. Now let's look at trading breakouts. So find a key support or resistance level on the 1 hour or daily chart. So I showed you guys how to look at support or resistance. Now this is your step one to trading breakouts. You want to first find a key support or resistance level on the hourly or daily chart. You want to check the daily to see if the stock is in an uptrend or a downtrend. Make sure the stock isn't too far from level and has high volume, okay? So here's some examples. Tesla. I'm looking at the daily, I'm looking at the hourly. So I'm looking at the daily here for Tesla, 741.5, clear resistance. And it was on an uptrend. Tesla, looking at the hourly, 741.5, very clear resistance there for the hourly as well. You can see the stock was on an uptrend, it started consolidating, it had some resistance right here, and that's what caused that level, okay? You can also tell that it was on an uptrend, right? So this was step two. You want to make sure that Tesla is on an uptrend before taking a breakout to the upside. So there you go. I took this trade. I waited for it to break out. You can see my P&L right there. Okay, so I took Tesla. This was back in September. I took Tesla breakout over 742, which was that daily level that I just showed you. Okay, so we're trading breakouts. We're looking for the key level. Remember step one, we'll look for the key support or resistance. Step two, you're looking at the daily or macro time frame, daily or hourly chart. You want to see that the stock is on an uptrend, okay? And then you want to see high volume on the breakout. So when Tesla broke 742 right here, had a ton of volume, way higher volume than the previous day, almost triple right there, okay? So a lot of relative volume, and it broke out, and I took it long. I bought calls on Tesla, all right? So it made a beautiful move up to 760. So breakouts, it is a great method to trade, especially if you're longing on dips or if you can find the key level like I just showed you and it's backed by high volume. So volume is very important. Here's another example. You can also trade intraday breakouts after stock has started an uptrend or downtrend and forms into intraday levels of support or resistance, right? So I just showed you a daily breakout where you can check the daily chart, the hourly chart, and then take the breakout in the morning. But you can also wait for a stock to create an intraday trend, okay? So Boeing here, for example, on the 5-minute, it started an uptrend in the morning. I didn't have it on my watch list, but it started a nice uptrend and created a little intraday resistance at 234.5. You can kind of see it started the uptrend, rejected on the first one, came back 20 minutes later and rejected again at that 234.5. So I want to take the breakout on that. So you can see it made a nice move from 234.5 to 237 and made some nice little money right there. And that's all I have for volume and breakouts. So I'll see you guys on the next lesson.
This has been